Welcome back, everyone. Today's video is going to cover exponential moving averages and how you can utilize them to trade or invest. A good tool to use to intraday trade, to swing trade, to just simply invest as well. I personally prefer exponential moving averages over simple moving averages just because exponential moving averages place more importance on the more recent price action. And today, there's a lot of high volume trading. There's bots trading at this point for big financial institutions. When you have high frequency trading, it will affect how momentum is moving now. You can't really rely on that data from the past. It is important to look at it though. So let's get started. This is the Neo chart. This is the weekly chart. The first thing I do want to emphasize is that if you watch my prior video, I broke down how to find support and resistance points. This is going to be a part 2 to technical analysis. In general, these are like the main things that a trader or at least an investor looking to get an edge using technical analysis should know. It's support and resistance, and then exponential moving averages or moving averages in general. What I use here for exponential moving averages, you can also use for simple moving averages. It won't make a difference. The first thing I like to do, let's tag support and resistance. So I have a drawing tool, and then there's a price level here. So I just tap on that. On the weekly chart, each candle represents 1 week of trading. So this is Monday through Friday, high, low, open, close. So that's a high, but I like to do it on the opening or the closing. This one gets a lot of touches there. I like that. And we can also do this. Now these are just support and resistance based off what I just saw here. So we saw a bounce, then we saw another bounce here, or at least it held support well, and it's about to retest that 33.26 level. So if this video is out by Sunday night, Monday morning, this is actionable because it looks like it could definitely touch that 33.26 level or area again. So for you guys who want to buy puts, it's looking like a good time. Not a recommendation, not advice either, just something I'm looking at. So we can switch to the daily. I'm going to add some exponential moving averages. So on Thinkorswim, if you type in MOV AVG EXP, and then you have move average exponential, you could double click here or just tap add selected. So you see here it's a 7-day EMA at the moment. So we're going to just hit apply. We're going to hit OK. And here it is. So if we go back, we saw a rally, had some resistance here, ended up breaking that resistance, went a bit higher, went sideways, sold off. Okay, so the 5 or the 7-day EMA is very important because you can start seeing short-term momentum or short-term change of price action. Now I am watching the daily chart here, which means each candle represents 1 day of trading. I want to zoom in on this area right here where we're looking at the 7-day EMA. Here, it's no longer within the average. It's moved above, and it deviated from the EMA, then started going right back up, deviated too far here, started coming back down. So you see it's deviating from this 7 EMA here. If you change it to a 5, you'll see that it's deviating from the 5 in the same manner. You could spot deviations a little quicker maybe on the 5. It's really all preference of what you like to use. So right here where you start seeing that the candle deviates on this day gives you a signal there could be sell-off momentum, especially when you have a candle that basically got taken out by 4 or 3 candles. So you could start seeing possible momentum to the short side. There's a term traders use, riding the EMA as support. In this case, you can see that the EMA has become a resistance essentially. It cannot get above that. Failed, and continued until right here you see a breach. And if you continue and you see the next day, Neo finally broke above the 7-day EMA here. After this, you could start seeing that it possibly would try to continue. The price action has already deviated above and away from this EMA. So this can give you some sentiment to start looking maybe at calls or start looking at entering a position on a pullback. So you continue to ride it and you see it's retesting that 7-day. But of course, it's going to always continuously be around that unless it starts to deviate further, like this day and this day. As you can see, then it tries to retrace back towards and above. This can show you how trends are happening, and it could also show you how to identify whether there's going to be a trend reversal or not. If you ever see price action below the 5 or the 7-day, you could start seeing a sell-off until it starts to really deviate away from the 5-day or the 7-day above the EMA. You'll start seeing a bullish momentum. As far as it remains below, if the price action is remaining below the 7 or the 5-day, you can start seeing bearish behavior, which is what's happening here. So even though it tried to recoup, it failed every time. As you can see, here's where we are. So now that we have this, I want to add another moving average. And I'm going to change this by clicking settings here, little gearbox. And then I'm going to change this to 50 for now. Change this to red, hit OK, hit apply. And let's see what we see. So now here's another way traders will utilize moving averages. And this is a very important one because this is where the terms golden cross and death cross come into play. So if you've heard of it before, great. It's just going to be a recap. If you haven't heard of it, essentially the golden cross is when the 50-day EMA crosses above the 200-day EMA. That's called the golden cross. The 50-day moving average, which is the 50-day average of the price in the last 50 days, has crossed above the price action over the last 200 days, or the average of the price action over the last 200 days. So it's really important to take note of those because you can utilize those to see, hey, if the 50 goes above the 200, that means that there's going to be more demand for the stock. If it goes below, there's less demand. So now I'm going to switch to the 4-hour chart here. And I'm going to show you some examples of the 50 crossing below the 200 and then the 50 crossing above the 200. So I want you to note that this is the same area from before, right over here. So as you see here, this is December 18th. You got the stock rallying up, and then you see consolidation sideways. But you see a lot of price action. You see a lot of go up and down. A lot of swings, actually, very high swings from 64 to 54. It was very volatile here, and then more volatile to come. So right over here, you have the 50-day EMA crossing below the 200, right there. This little spot right over here. I'm going to zoom in on it right now. Now this right here would tell you that you should probably short. This is called a death cross. Now, usually you don't want to do it on lower time frames. You'll want to do it on the daily or the weekly. However, I'm just showing you as an example of what the crossings mean. So now that I added both of these, you could see how the 50-day EMA crosses below the 200 and there is a sell-off, right? So you just had a confirmation, or at least EMAs can give you a confirmation that you may need in your analysis. When using technical analysis, this is a big turning point whenever the 50 crosses below the 200. So that can let you know there's an indication to start selling. And this happened on this day when it was trying to bounce right back up. You know, entering a short position here and then giving it enough time, maybe a month out, you would see that from February 24th, right over here, after seeing confirmation, you enter that short position, you get a taken profit here or down here. So now if we keep moving forward, you will see that eventually the 50 will cross back above right over here. And that gives you confirmation most times to remain or enter a long position. So as you see here, once it crossed, you could have entered any point on the bottom, you know, and using technical analysis, wait for it to continue a rally, and then you have a point of resistance right over here at 54.13, which At the beginning of the video, if you guys remember, I tagged these levels up, and you'll see here that, of course, it got rejected. It went above, failed, came down next day. But regardless, after confirmation here, you could have entered a long position, and then you would have taken profit anywhere really where you could have 10%, 20%, 30%, 40%. Now, another important note to take here is, remember how I told you on the daily that the price action is above or below the EMA? It's important to take note of that as well. Whenever you see price action above any EMA, it's giving you bullish momentum. But once you see it cross below, like right over here, I'm going to highlight that area with the circle right over here, and say we entered the next day after we confirm the cross, right? If we go to the daily chart, that entry is right over here, which is a good entry for a short. Once you see a breach, and by breach I mean this wick right over here, so you see the price action's above, hasn't touched this line until right over here. So it's breached this moving average, the 50-day moving average. After breaching the moving average, usually you expect either a bounce or a retest. The next day you see it tries, but it still fails to go higher, or fails to really have a significant strong move. However, the next day proves to be a strong move. You see a big red candle, and it's crossed below the EMA. And then what this means is that now the price action has fallen below the 50 EMA. There's lack of demand, there's a lot of supply, people want to sell, take profits, etc., etc. So entering a short on the next green day, which would be right here, is exactly where you'd want to do it. Now, pairing this with the daily and the 4-hour chart, you see that that's a pretty good entry for that short position right at the crossing, right around here. Once you've confirmed the cross at the high, or even if you entered here or here, you would have made back a good 30 to 50% right there on picking a good option. Now, on the upside, again, same thing. I'm going to highlight this area. Go back to the daily, and now let's look at where the daily tells us this. So as you can see here, you can see that it also retraced or deviated away from the 50 EMA towards the 200-day EMA. Now here's where the 200-day EMA, or EMAs in general, play a role in being a support and resistance as well. Here you saw that the 50 EMA became a support, as you could see that the candle closed a bit above it. Support here as well, and to this day where it broke through was no longer support. So now this EMA will prove to be a resistance at some point in the future. So now once it's sold off, you see that it bounced off the 200, also bounced off the 200, and then continued to ride out the 200 a couple of times. Now it retested the 50, but it failed the next day. It never confirmed. So as you can see, once the price action breaks below this or a support, it will become a resistance. It went above it one more time, but then failed the 50-day test. And then we finally see that it breaks below 200, finds some support around this area, and then we see it bounce. This is exactly how you would utilize EMAs. I do like to always refer to the daily and the weekly before I even dive in to the 1 hour or the 5 minute or the 1 minute, because it's important to look at the grander scale and then zoom in on that grander scale. So for example, right here, first thing I'm going to say is, one, price action below the 50 and it's below the 200. In this case scenario, I don't see bullish price action. A phrase that's used often is you just follow the trend. And as simple as that sounds, it's also very difficult to follow, because often everyone wants to predict when trend reversal will happen, and well, no one really can predict that. It's hard to. Can a trend reversal happen at resistance or support? 100%, but you need the data, you need the past, you have to be there. So if I go to the weekly, what I'm looking at here is that the 50-day is technically a support here. So although it is below the 50 and the 200 on the daily, on the weekly, the price action is telling me that it's sitting at the 50-day support. So now if I zoom in, we see that it's been a support once before, and it could be a support once more. However, because this area and this price action became a support, the price can also possibly go to 33.26 and deviate towards that downside. So if I go to the daily and I look at this one more time, there is potential for either a test of this area again or a test of 33. However, you could bring in other sources and analysis and indicators like the MACD, the RSI, just to see if the stock is oversold or if the momentum is dead for the sell side and it's going to the buy side. If you would like a video on MACD or the RSI, like the video, please. Leave a comment if something didn't make sense so I can answer those questions. Leave a comment if you like this video, if you'd like something more, or if you'd like to see something else. Take care. Have a great trading week.